For decades, retirees followed the same American dream: low taxes, warm weather, cheap living, and for years, cities like Phoenix, Tampa, Las Vegas, and parts of Texas became retirement magnets for millions of Americans. But now, something is changing, quietly, and very quickly. In 2026, retirees are leaving some of America's most popular cities faster than anyone expected. Not because they want to, but because many can no longer afford to stay. Insurance costs are exploding, property taxes are climbing, healthcare systems are overloaded, water shortages are becoming real, and extreme heat is pushing older Americans to reconsider everything. What used to feel affordable, suddenly feels unstable. And in some cities, home values are beginning to crack under the pressure. Today, we're looking at 10 American cities retirees are quietly abandoning in 2026, and why experts believe this migration trend could reshape the U.S. housing market for years to come. For years, Phoenix represented the perfect retirement formula: affordable homes, dry weather, lower taxes compared to California. But in 2026, the math no longer works for many retirees. Summer temperatures regularly exceed 110 degrees. Electricity bills have surged. Water concerns continue to grow across Arizona. And perhaps most importantly, insurance companies are becoming far more cautious. Many older homeowners are now paying dramatically more just to maintain properties in extreme desert conditions. Healthcare demand is also rising faster than infrastructure can handle. For retirees on fixed incomes, Phoenix is no longer the bargain it once was. And slowly, many are cashing out and leaving. Florida was once considered America's retirement paradise. But in Tampa, reality is changing fast. The biggest problem: insurance. Home insurance premiums across Florida have exploded over the last few years. Some retirees now pay more for insurance than their original mortgage payments. And after repeated hurricane seasons, insurers are pulling back from high-risk areas altogether. For retirees living on pensions or Social Security, the pressure is becoming unbearable. Add rising HOA fees, rising property taxes, and growing climate risks. And many older residents are beginning to leave Florida entirely. Not for luxury, but simply for stability. Las Vegas built its reputation on low costs and endless expansion. But underneath the casinos and tourism, a very different story is unfolding. Water scarcity is becoming impossible to ignore. Lake Mead remains under historic pressure, and concerns over long-term sustainability continue to grow. At the same time, housing prices surged dramatically after the pandemic migration boom. Now many retirees face a difficult reality: higher costs, extreme heat, and increasing uncertainty about the future. Some are choosing to leave before the situation becomes worse. Because for retirees, stability matters more than excitement. Austin became one of America's hottest migration destinations during the remote work boom. But retirees entering the city today face a completely different market. Texas may not have a state income tax, but property taxes continue climbing aggressively. And many retirees underestimated how expensive long-term ownership would become. Healthcare demand is also straining infrastructure as population growth accelerates. Meanwhile, home prices in many Texas markets surged so quickly that affordability has started breaking down. For retirees hoping for a low-cost lifestyle, Austin increasingly feels like a city built for high-income tech workers instead. New Orleans has always lived with risk, but in 2026, that risk is becoming far more expensive. Insurance premiums have skyrocketed across Louisiana. Some homeowners report annual insurance costs increasing by thousands of dollars almost overnight. And for retirees, that kind of volatility is dangerous. Storm fears remain constant, infrastructure challenges continue, and economic uncertainty is pushing many older residents toward safer, cheaper states. For many retirees, the emotional connection to New Orleans is strong, but financial pressure is becoming stronger. What makes this trend so important is that it's not isolated. This is happening across multiple states at the same time, and economists are beginning to notice a larger pattern. Many of America's traditional retirement destinations were designed for a completely different economic era. An era of lower insurance costs, lower taxes, cheaper healthcare, and more predictable weather. That era may be ending. Cape Coral experienced one of the biggest pandemic housing booms in America, but rapid price growth created a dangerous imbalance. Now retirees face soaring ownership costs combined with climate-related insurance pressure. Some neighborhoods still struggle with rebuilding issues from previous hurricanes, and many retirees who relocated during the boom years are quietly reconsidering their decisions. Sacramento,